Hello everybody, this is Anupriya and I'm going to present a small presentation on financial planning. So in today's presentation we're going to discuss topics like the laws regulating the role of a financial planner, the type of business structure a financial planner can choose to operate in, and also the contract law and its applicability in financial planning. So, if you're operating as a financial planner in Australia, you need to comply with Chapter 7 of the Corporations Act 2001. So, here is a key which I've made which records all the subsections of Chapter 7 and deals with the various obligations a financial planner has to follow. So, a financial planner has to be a relevant provider if he has to undergo all of the obligations under Chapter 7. So, a relevant provider is a person who is either a financial services licensee or an authorized representative of a financial service licensee. He can either be an employer or director of a related body corporate of a financial service licensee, or can be authorized to provide personal service to clients as a licensee on behalf of a licensee. So, ASIC is a body which regulates the person who carry on financial services in Australia, and the two provide services like licensing those persons, monitoring the ongoing licensees, and taking action in case, say, a breach. So, if you want to start a financial planning business, you can either operate as a partnership or as a company. So if you operate as a partnership, it will be a relationship between two or more people who agree to carry on a business in common with the aim of earning profit. It has to be remembered that a partnership is not a legal entity and can be made explicitly or even implied by the conduct of the parties. However, in case of a financial planning business, there can be no more than 400 partners in a partnership firm. In the case of a company, it's an artificial legal entity which has perpetual existence, can sue and be sued in its name, and can hold property in its own name. So, a company, unlike a partnership, has to be created legally by registration through ASIC. And also, it has no limit on the maximum numbers of members, but there must be at least one member and one director. So, according to me, a business should choose to operate under a private company because there are a number of advantages, like there's limited liability, so the members will be liable only to the amount of unpaid shares held by them. Also, it's easy to raise capital because the members are more. There's separate legal entity and it can sue and be sued. Also, there's perpetual succession, so the organization does not come to an end until it is liquidated. Also, there are some disadvantages of a company. So, there is lack of secrecy because the companies have to publish their annual reports on regular basis. The companies must also comply with number of restrictions and regulations. There's high cost of establishment because there are 4 lengthy processes involved in the formation of a company. Also, there's loss of control because shareholders enjoy voting rights. So, according to me, a private company would be the best because it will have the advantages of a company and it will not have to incur cost relating to the issuing of shares. Now, the contract law for financial planners. So, financial planners obviously enter into contract. So, what is a contract? A contract is a legally enforceable agreement which must satisfy three requirements. There must be an agreement between two or more parties. The parties must intend that the agreement is legally enforceable, and both the parties must pay a price or make a promise. So, for a contract to enter, there must be offer and acceptance. So, offer is made when a person expresses willingness to enter into a contract with the person the offer is aimed at. So, for example, if Finance Limited Company offers tax planning services to Miss Jones in exchange for 5,000, Finance Limited is the offerer and Miss Jones is the offeree. So, merely making an offer is not enough. there must be acceptance, and acceptance occurs when the offeree indicates by words or actions that they're willing to enter into legally enforceable contract. So if it's not accepted or rejected, the offerer can revoke their offer, and if there is no proper communication of the acceptance, there is no proper acceptance in actual. So, a financial planner typically enters into three types of contracts. So, there are contracts with clients in which he provides examples like statement of advice to the clients for retirement planning, superannuation, or estate planning. He can also enter into contracts with staff, for example, employment contracts. And there are obviously general business contracts like contracts with suppliers for furniture, machinery, etc. So that was all for the presentation. Thank you a lot.